and Ferris.
Yep.
So what are we talking about today, man?
We're talking about your hair.
Oh, or lack
And you know how much better now. We're talking about how to raise
Yeah, I always
money
get that
during
in
COVID. I
every
got it in
show.
at the beginning a little differently.
You
so
intersperse it throughout.
Money Mondays, we do this every Monday, 3:30 Central. We talk about a bunch of different topics. This week we're talking about how to raise money during COVID-19, and a little bit on kind of how to raise money as well as what do you do on the underwriting to present to investors, right, which helps lead to raising money.
Yeah,
And you know, for those who watch it for the first time, we do a bunch of different topics. You guys are welcome to submit future topics and or future questions. And at the end of the show, usually we'll kind of go through about a 15, 20-minute presentation. Then we'll do 10 minutes open Q&A. So people can go ahead and ask questions live. We're happy to answer them for you.
And I think that's the most important thing. We want it to be interactive, folks. So yeah, I mean, we encourage you guys to comment, like, you know, share the, you know, the episode, and ultimately give us feedback, right? If you don't like the way that he looks or the way that I look or the topics that we're going over.
Hey, we're not wearing flannel.
I know. Like I said, I literally look in my closet every Monday, and I'm like,
yeah, Ronnie would be very disappointed.
What I'm wearing today.
I did almost wear a very similar colored shirt.
A blue
so I'm glad
one?
I did not.
Well, we've matched in the past, and we didn't even talk about it. You know, somebody else just had to call us out about it, and I was like, oh, we are both wearing blue. So no, but we're excited. This is a topic that, you know, we like to talk about. We like to talk about raising money, doing deals, right? You know, so I guess
it's the sexy part of the business,
right? It is.
Operations is not so much, not a very fun part.
It's not, right? I mean, I think the gurus would always kind of try to say, okay, here's how to underwrite a deal. Here's some tips on how to raise money. That's really what they focus on, everybody. So, you know, and the reason that they focus on some of that stuff is because that's the sexier, more fun stuff to talk about. Whereas the operational, the asset management piece of it is a lot more boring, but probably a lot more important, I would say.
Yep.
Right? You know, but ultimately, a lot of folks starting out, they've got to raise the equity to be able to get into these deals. Obviously, you've got an extra 0 or 2 at the end of the purchase price. It's going to take some more capital than most of us have in our bank accounts. You know, so you get into syndication, right? Where we're pulling people's money together.
What is syndication, Ben? Maybe really quickly.
I was just about to get the definition, man.
Go for it.
No. So syndication is you're essentially pulling.
I like to give Ben the easy questions, and you know we leave the hard
ones. As long as you don't make me try to calculate IRR right here on our episode, we'll be good, right? You know, so syndication is you're essentially pulling money from multiple investors, right? And you're using that as the down payment and your working capital, and sometimes for your rehab. Right, and you how much you have to raise, or usually depends on how much, you know, the purchase price is. But then also, you know, I mean, you can have investors that put in 100,000. You can have investors that put in 50,000. Right, so just realize that you might have to wrestle with 30, 40 investors on a deal too, and that's something that people have to take into consideration. So let's talk about tips.
Well, to give a better example, right? I like to give the example basically. If Ben had $50,000, Ben could buy a $200,000 house.
Yeah.
Right? But if Ben and 10 friends, assuming he has 10 friends, right, all have $50,000, right? That's $500,000 that can be raised.
Dude.
9, close, you know. Don't worry, I'll spot the last bit of it. But basically, you know, that's $500,000. You can buy a $2 million property. And so, you know, that leads to scale, that leads to efficiencies, and hopefully that leads to a team, dedicated resources, and a little bit less of a headache of a property. So that's what syndication is, right?
Yeah, you're leveraging. You're right. You're leveraging other people's money to get into something bigger, right?
Yeah, something more scalable.
Yeah, it's scalable, and that was one of the reasons that we liked multifamily in general, right? It's just that it's more scalable than buying. I can buy 100 units in one property, and it's going to be a lot easier than me buying 100. You know, houses, even if it's in the same subdivision. It's just, that's not a scalable business model, right? Now, don't get me wrong. We know some people that have done it. But it does take them probably 10 years, and it would take us about 6 months.
Yeah.
So let's just talk about tips in general on raising money, because I think some things have kind of changed during COVID. I think it's gotten a little bit harder raising money, but ultimately the basics are still there.
And it's funny, right? It seems like it got hard for a little bit and then the complete opposite, right? All the pent-up demand and everything we're seeing, people are raising money out there, right? People are buying deals. Maybe those deals are good deals or not, that's kind of irrelevant. But from the investor side, there's a lot of interest out there, right?
Yeah.
We have investors, literally in the past probably 2 weeks, I'd say we'd had at least 7 different investors pinging us asking, hey, when's the next deal? When's the next deal? Yeah. People are getting antsy. People are really looking for,
you have people that we know of, right, that are in every single one of our deals, and they're almost their job. Their job is to be a passive investor. And so whenever their deal flow slows down, right, they're clamoring for the next deal because they've got money that's sitting on the sidelines that they don't want to put in the stock market for whatever reason, or they don't want to keep it in the bank for as long, because obviously you're not going to get any kind of return on that. So they're looking for deals just as much as we're looking for deals.
Absolutely.
And so after about a 4-month lull of really nobody doing anything, July kind of hit, and people are just kind of just stumbling over themselves trying to buy up these deals. And we're pretty close on a couple, but we're sticking to our guns. It's been a year since we bought, and the reason being, right, we're looking for the right opportunity. And, COVID is not going to change that equation, right? In fact, it's going to make us probably just that much more cautious and conservative.
Totally.
So that kind of leads to my next statement, right, is, how do you incentivize people to invest in your deal? Well, you got to have some kind of level of return, right? So in order to make sure that your deal is properly positioned, you need to look at a lot of deals. You've got to underwrite a ton of deals. It's ultimately a numbers game, folks, right? You're looking at 100 deals, maybe you offer on 10, maybe you get 1, right? And that's not necessarily the equation that you can say it's probably going to be 100, you're probably going to offer on 50 and maybe you get 1, right? So my point is that you have to underwrite a ton of deals to get to a point where you finally get one under contract, right? And, the returns need to be there. You also need to understand what your equity pool is looking for, right? Some equity is going to be more patient than others. And what does that mean? That means that they can wait 3 to 5 years for a total return, right? Or some kind of a sale or refinance event to kind of occur where they get the majority of the return from the investment. Whereas some people are first month, even though, they should understand that you can't mathematically pay a pref month 1, are expecting that level of return, right? And so you need to understand what your equity pool is looking for, because then you can position the right deals in front of them. Because once you marry the equity to the right deal, your chances of success in raising that money is going to be just that much higher.
Absolutely.
Right?
I like to say we are glorified matchmakers.
No, we're absolutely
deals to equity.
That's exactly what we're doing. Because whenever we find a deal, we're like, okay, so and so really likes Atlanta. They like this kind of asset. We're already positioning that to that investor pool.
People that like newer deals, older deals, people like deeper value adds, lesser value adds, people want coupon clippers, people want to maximize money, people want to maximize losses, different needs.
And you need to keep up with this. One thing that we've talked about in the past, right, is how do you need to take notes on each of these investor calls, right? You track them through a CRM. Understand where they're coming from, what their risk profile is, what type of exit strategy are they looking for, what type of timeline are they looking for. You can start really getting very, very calculated as to, hey, this deal is good for these 50 folks, so I'm going to actually pick up the phone, not just email them, and I'm going to call them because I know for a fact, based on my notes and on the conversation that I've had, that these people are going to be the most likely people that are going to put money into this deal.
Absolutely.
Right?
So, for those of you tuning in, Money Mondays, we do this every Monday, 3:30 Central. I think we got on a little bit late today, but now we are live. Well, because Ben wouldn't stop the talking, and he was just kind of going, no, not Ben's fault this time. Technical issues, but we got it resolved. Tuning in, Monday, 3:30 Central is usually the start. Go on for about 30 minutes. Usually the first 20 minutes, we're doing kind of a presentation. We're presenting about raising money during COVID.
Yep.
And the last 10 minutes is open Q&A. So if people have comments, questions, suggestions, go ahead and leave them. Ernest, how's it going? Chat?
What's
Hey,
up?
how are you doing?
Chat?
I owe you a text back, I realize. Iggy is always on as well,
Hey.
as well as Ronnie. So
Mr. Ronnie.
appreciate you guys kind of coming on.
Gave you a shout out earlier, buddy.
Let's see, my boy Abel as well. What's up, gentlemen? Hello, everybody else. So Abel's a trooper.
Yeah, no, we appreciate you guys. Always some loyal fans. We appreciate that. Throw some comments in there. Ronnie, Ernest, I know you guys, chat.
Yeah,
All you guys.
who has the nicest shirt today, me or Ben?
Hey, whoa, we all know the answer to that question.
We don't have the smile, so
we all know the answer to that question, my friend. They don't need to even answer that. No, but I'd love to hear people that are tuning in, right? Yeah. What are some tips and tricks that they've seen? What are some things that are working for them, right?
Chit Chat's raised money during COVID already, so you've kind of gone through it, and it's ultimately, everyone different strokes for different folks. So always happy to listen to ideas people have, and ultimately for raising money, it's about figuring out, can you add value to your investors? Can you meet their need? And is it a match or not, right?
And the one thing that I was there's ebbs and flows in our business, right? Things kind of tend to ramp up in spring and the summer. Obviously that didn't happen, so a lot of that got bow waved. But a lot of people now, right, if you can close a deal before the end of the year, what do you get?
You get, I don't know.
The
What do you
losses.
get? You're talking about the losses? How am I supposed to figure out the answer to that?
Come on,
there's
that
a
was a
million
great- that was
things
a
that you
great
get.
lead-up. That was
you
a
get
great
a
lead-up.
deal, you get
You get
fee, I mean, I don't know.
you get
losses,
egg,
and we
right?
do have several investors that have been pinging us, really
Yes,
looking for losses.
that's why I'm saying
for those
right
of you
now,
that are those people, I'm sorry we haven't found a deal. We're just trying to find the right deal. We're not
Trust
just going
me.
to buy a deal to help
We'd
get
love-
you losses.
we'd
Losses
love
are
to-
great, but losing money on a deal is worse. So we're being patient on that. But hopefully, we're hoping to have a deal in the next few months. But who knows, right?
Yeah.
Maybe we'll have 3. Maybe we'll have none. So,
No, but my point of all that, right, is that right now, if you can get a deal closed by the end of the year, right, those people can get those losses, right.
Yeah.
And for a lot of high net worth, partners and investors that we kind of work with, that's a big part of their investment strategy, right? Yes, everybody loves cash flow, right? But when you're coming up and you're saying, hey, I can pay Uncle Sam $200K or I can pay Uncle Sam $100K, what are you going to try to do? Right, you're going to try to get into a deal so you can minimize your tax exposure,
Absolutely.
right? And so we do have people right now reaching out to us just for that one thing. And I would say the more wealthier people that we talk to, that's more of their strategy,
Yeah.
right? It's wealth preservation and the decreasing of their tax.
They're looking for return of their money,
Yes.
not just return on their money.
Yeah.
That's a big part of it.
It's a big, huge part.
So for those of you tuning in, Money Mondays, we do this every Monday, 3:30 Central, live, and basically doing our presentation at the beginning, talking about raising money.
Yep.
The last 10 minutes will do Q&A, so if people have questions, go ahead and leave them. But to kind of go through a few of the comments, Ronnie says no plaid today. Nope, Ronnie, you've made us all paranoid. And Ben and I now have 5 extra shirts in the office, so we can make sure if we are wearing plaid, we have non-plaid shirts. No, I'm kidding.
I literally changed right before I walked in the studio, dude.
Amir says, what's going on, you beautiful hosts? I don't know why he said hosts. I think he meant host, probably referring to me, but we'll leave it at that. Chat says it's a bit more challenging because people tend to save their money for a better opportunity as they believe, but at the end of the day, it's having a great deal that will make investors invest. And that's true. I mean, at the beginning of COVID, right, everyone was kind of patient, just, whoa, I want to keep cash on hand, don't know what the future holds, and not want to invest.
Let's be honest, right?
And
it was the sky was falling. I mean, March, April, May, it was pretty bad, right? June it started opening up a little bit, and July got a little bit better, but people are still a little skittish, right? So, I mean, I guess I'd ask maybe a question of you, right? Is, all right, you're going to approach somebody, say we have a deal now, right? Mm-hmm. The cost segregation and the losses aside, right? What are some tips for our viewers, right? That, you want to come across confidently that, this is the right time to invest in a multifamily deal.
I'll say right now it's a couple things. A, debt. Debt is the best it's ever been, probably the best it may ever be. Who knows what the future holds? But at least right now, debt is extremely attractive, right? You can lock in long-term debt and sky's the limit. That's one. 2, there are operationally challenged deals that we've been looking closely at, which in my mind, I love those kind of deals. If I can buy a nice deal in a nice area, that's operationally challenged. Guess what? We have management in-house. We know how to kind of operate that tightly. That is our value add, right? We're not having to put $5,000, $10,000 a unit into this property and bump rents $200, right? We don't need to do that. It's purely about operate the property effectively as is, right? To me, that's a lower risk proposition.
Recap it a little bit,
so,
right?
Recapping is different though, right? Than doing a deep value add.
I agree.
So recapping is kind of cleaning it up versus, hey, these units are not great. We want to put it to a higher standard. And so, I mean, it's really giving the business plan and making sure it aligns with what the market looks like, right? And if you can sell people on the long-term aspects, the cash flow, and really, the play, I mean, that's a match made. And so you can definitely pick up people.
I love the debt piece. I think that's probably the most important thing that I'm seeing right now. I mean, who can lock in 3% interest rate for 10 to 15 years, right? On a 30 years amortization, right?
I did that 10 years ago, Ben.
Yeah. Right. No, there was probably more like 5 or 6 back then, right? My point is, this is the best debt that we might ever see in our whole entire career, right? Yeah. Now, people are going to say, oh, it might be perpetually low for the next couple of years. Probably, right? But that doesn't mean that you can't lock in a great deal right now.
Yeah, we're doing a refi right now, and 10 years did go up a little bit today, by the way. I was checking the chart. I'm like, I want the 10-year to stay right where it is for a little bit.
We're paying over 6.
It's because of stimulus. So if stimulus botches the next day or two, maybe it'll go back down.
But tell people, I mean, we're refining out of a 6% into close to a 3. So we'll take that all day long, right? Absolutely. You're literally halving your interest payment, and
Did you know that closing should be next week? By the way,
I know.
I was looking at the calendar.
I'm excited
it'll
about
be good to get that
So
refi done.
debt is important, but I think also the one thing that we're telling investors is our thesis, has really held true, right? That multifamily is one of the more resilient asset classes in commercial out there.
Like I tell people, the COVID has helped prove that after people drink and eat, they need somewhere to sleep.
They need shelter.
The government supports that, and
it's the hierarchy of needs. And yes, the government is one of our biggest supporters, our biggest partner in these deals, and they want us to provide affordable housing. They don't want these deals to go to pot.
Yeah, as much as I think people need a studio like this or office space, unfortunately you don't. We learned but housing is critical.
But we don't own this building, so we're good. We're just
we should own this building.
We might. We never know, right? So those are some tips. All right, so let's talk about. We got some questions in here. All right, so let's see here.
Really quickly, pause. So chat says no matching shirts today. And hey, Jefferson, I missed your question earlier, but yeah, how's it going?
Hey.
No, we don't have matching shirts. We should both wear additional polos. Let's see what else. Ronnie says Ferris is missing Starbucks today. No, I already finished it earlier, actually. So
I held on to mine just specifically
Ben
as a
doesn't drink Starbucks for the sake of the coffee. It's more about the brand thing and the
be,
coolness factor. So that's why he's kind of front and center.
I'm bourgeois, right?
So yeah. So let's
see. This is where you're
so,
supposed to put the laugh in, all right?
I did.
She did
good. All right,
you should play the sympathy laugh though, like the wah wah
Wah,
wah. Let's see. So Jefferson says, what systems do you use right now for raising private money / capital, and how do you attract traffic to your site / funnel? Okay. Good question. So for us, we do a combination of live webinar, bring people on, let them ask questions. Everyone can see everyone else's questions. Nothing to show or hide. We, those are usually investors that we already have a relationship with.
And those are live too, by the way, too. So we'll get some curveball questions. Most people either don't do webinars anymore or they don't do them live. Yeah. We just, candid, if you like the deal, you don't, whatever, you can come on, you can ask questions, and people like that. They appreciate it.
Yeah, and then, from that, send them a PPM. We do use IMS. I don't love IMS. David knows that. I didn't tell you I put together a nice thing about the distributions, by the way. I'll show you later. But we do use IMS, so that helps investors kind of get through. We don't use it for the I'd say the raise side of things. We use it for once we're closed and the operational side. I think the raise side is pretty wonky. So instead we use DocuSign. We have VAs that help streamline things. Yep. We have kind of a good process to help investors on board. I think that's one of the questions that we did get in. But I guess I'll read that question because it kind of ties to this, which is how do you guys handle your initial onboarding of a potential investor, right?
Yeah, it's IMS, right?
It's IMS. We do have kind of a service we've put together to make it really dead simple for investors. Because really, what do investors have to do? They have to fill out, 5, 10 pieces of paper. They have to, make sure it's right. Then we have to review and approve it, and then they have to wire funds. Yep. So it's really about how do you make every step along the way much, much lower barrier, much easier to do, and also safe and comforting, right? Yep. So we've been kind of refining that process, and I think we have one of the better processes
what we were
in
talking
the
about, we white glove it, right? Where if the people don't even want to do the paperwork, right? You can set up a time, 15-minute call. We'll walk through everything that's not, the most personal of information, like your social security number, right? Our VAs and our staff will fill all that out. They'll send it to you. All you got to do is plug in your social, sign the dang thing, and boom, it's done, right? So, instead of, groveling about, hey, I got to sit down for an hour and fill all this out, we'll do it for you in 15 minutes. So we're trying to white glove that process to make it a little bit easier. But to kind of go back, about funnels and processes and how to get investors kind of on board, right? One of the reasons that we do this show, right, is we're educating people first and foremost. That's our main mission here. But also, this is a branding thing. You have to get your name out there. You have to tell people what you're doing, right? I've gotten family and friends to invest in my deals just because they're like, oh, I didn't realize you were doing that. I'd love to invest in that stuff. Right? So you have to have a mechanism where you can meet, especially right now during COVID, where a lot of these in-person events are just not happening, right? Where people would traditionally meet potential investors. You have to go one step further and really build your own personal brand and make sure that you're doing the networking piece that you need to have a big enough funnel of people that you could obviously market the deal to. So what is this question? So what methods do you use to automate staying connected to them while waiting to find a deal? Well, yeah, I guess I kind of answered that question a little bit. We're trying to educate people. We're trying to provide content. We do have monthly newsletters that go out, right? It's a combination of educational stuff and podcasts that we've been on and just trying to kind of keep top of mind, right?
We have honing pigeons. We send out messages with occasionally.
Maybe a smoke signal or, here or there, right? But you have to keep top of mind because, especially within, we always kind of call it the Texas bubble. We know a lot of people here doing deals, right? So you have to kind of differentiate yourself.
Differentiate
a little
yourself. Do things that are bigger, harder, and tell people just constantly what your philosophy is, what your approach is, and what your plan is moving forward. I think that's a big part of it, right? Ultimately, a lot of investors invest because of us, not the deal, right? And they believe in the deal, but ultimately they have to believe in us performing. That's what it boils down to. So,
No, and it's not easy. You got to have the right team, but yeah, to automate it, right? I wouldn't say that there's going to be a process that's going to ever be able to 100% automate this deal, because at the end of the day, it comes down to relationships. Yeah, You're building on the relationships you have, and they have to trust in you to, obviously provide the equity. Otherwise, this crowdfunding stuff, yes, it gets you a little bit of the way, but nobody's doing that 100% on their equity raises. You might use that as 10 or 20% just to augment what you're doing. The other 80% you're having to do, by picking up the phone, right?
Yep. So Money Mondays, do this every Monday, 3:30 Central. Go through a bunch of different presentations. Yep. This week we're talking about raising money during COVID. Next week we're talking about, Ben doesn't know.
Hey, whoa,
I put him on the spot. But I don't know what we're talking about next week. Oh, wait, we do thank you, Shannon. Multifamily deal life cycle. That's what we're going to talk about next week. But,
nice try.
We first 15, 20 minutes talk, we're doing our presentation, then the last 10 minutes is Q&A. So if people have questions, feel free to leave them. We're happy to answer them live. And so chat says relationship, organic ones especially. This will attract money to you organically. I guess this is just my humble opinion. Totally agree.
No, absolutely.
I mean, no questions asked.
Like you should not feel forced or salesy, right? And people that know us know that we're very approachable guys. We're likable people. We will answer questions. I will admit faults, right? I'm not here to try to, slime ball sales you on anything, right? Even though I come from a sales background. I think somebody called salespeople slime balls.
Yeah, slimy sales guy.
I used to be a salesperson. You literally could see him taking his shoe out of his mouth.
Someone we're trying to hire, actually.
Yeah, no, I was like, I was trying to mess with him a little bit. But it doesn't need to come off like that. It needs to, and this is what we talk about with the brokers too, right? You need to organically build relationships with these people, not just this, gimme, and I'm going to try to get one over on you, and I'm going to try to sell you that I'm the best person, right? The people, they are positioning these deals to the people that they like, know, and trust too, right? And so don't come off as fake, and they're going to see that right through that. You need to do the same thing when you're raising money, especially right now. People need to trust and like and know you before they're going to, put their hard-earned money to work, especially right now when things are still a little chaotic in the market, right?
Yep.
And obviously the stock market's ramped back up, so that's kind of a hard. Sometimes you can, when the stock market's, kind of maybe you've taken a nosedive or going the other direction, that's an easier sell. So you really have to know those folks, and they have to trust that you know what you're doing to get this thing across the finish line. Right? So
continuing on, so Ernest says, I was your onboarding culprit, LOL, rarely gets discussed.
What was that?
He was our onboarding culprit. I don't know.
I have no idea what
Ernest,
that means.
You're going to have to explain that to me. I was hoping better.
Come on, Ernest, you're killing me, man.
I know, man. So Kyle Jones says, check out Invest Next. I can connect you way better than IMS. Yeah, the biggest problem with getting off IMS, just the burden of making all of our investors get over. So that's really the reason.
It was a commitment. It's very sticky. They know that too.
Yeah.
But so we still would like the intro if you can do it.
So Rob says, are most of your deals 506B or 506C? What I prefer to you? So far, most of our deals have been a B.
Yeah, we did 8 out of our 10 deals have been a B.
Yeah, right? we've done 5 or 6 Cs, and ultimately moving forward, probably we'll do more Cs. Yeah. It's just that it adds an extra complexity layer to investors, right? Yeah. Most of our investors are accredited to begin with, but it's now, instead of self-verification of accreditation, you have to use third-party accreditation. So now you have guys that are worth $10, $20 million telling me you need me to do what? Right, to kind of, for them to go prove that they are worth.
But you can get your CPA or your attorney to draft a letter, which is probably the easiest way to do it, right? And that's the smarter guys and gals usually do that. But, and we kind of took a step back and started looking at our investor pool. 80% of our investors were accredited already, and that allows us to leverage, some of the branding and the social media stuff that we're already doing too. So. It's a win-win, but we'll see. We play it by ear. It's deal by deal.
So Abel says, I'm doing podcasts, virtual meetups, social connecting, virtual boot camps, making myself available to help others, etc. As you are all doing the same, do you both subscribe to the mindset of attracting an avatar or specific type of message to attract a very specific type of investor? If so, what is your avatar? If not, how do you think about messaging?
Wow.
So do we attract, we attract certain kinds of people, and Ben attracts different people than I attract. Right, that's just natural. People have natural tendencies toward different people.
And
Now,
we even
do
know that even in a networking situation, right?
There's
You know,
networking situation, you know, Ben will go talk to certain people, I'll talk to certain
Yeah.
people, and maybe I think Ben's a better fit, I'll tell him, or vice versa. Now, do we put on a persona for a specific avatar? I don't think so. Our persona is just very much candidness and just
Yeah,
being
I want
transparent. And
nice
I want to
people.
attract the people that like that, because that's
Yeah.
ultimately
I want
more
nice
of our
people
style,
that I
so.
want to be a partner with, because that's ultimately what our investors are, right? They're our partners in these deals, and so you know we're vetting them as much as they're vetting us, because at the end of the day we do have a pretty deep bench of investors, and so you know I would much rather make sure that I get the right people into the deal, than beg somebody that I just don't like, know, or trust, right? To invest in our deals. So, but yeah, no, I'm not. That's just by being candid, open, and transparent, and just our personalities in general, we just tend to attract those types of folks anyway.
Yep.
So, come on, we don't got any more
yeah,
questions,
let's see,
man. I
any
thought
more?
people would want to talk about raising equity. Come on, Ronnie. I know you got some tips here, buddy. No. Okay. All right.
Oh, we'll give people another minute or so, and if not, we're going to wrap it up right on time. I know we started 2 minutes late, but
we got to
any
do
more
it.
questions?
We got to do it.
Eagle
All right,
says, thank you. You are welcome, my friend.
Thank you. All right. So just to remind people, next week, multifamily deal life cycle.
Yes.
So we're going to do some
all
full
the processes of a deal. So kind of what it takes.
full
start to finish.
cycle, all the way to disposition.
Maybe we're going to present one of our actual life cycle, one of our deals life cycles. Maybe not. Looking at Shanna. Shanna's ignoring. Yes, she's nodding yes. So.
She's saying yes. Shannon does a great job, keeping us on point.
Yeah, but if not, so for those of you, we're about to wrap it up. But Money Mondays, do this every Monday, 3:30 Central.
Yep.
And like Ben said, next week we're talking about multifamily deal life cycle. Abel did ask a cool question. Have you ever used preferred equity? We have not used preferred equity. I don't know if we will. I don't know if it, right now in this kind of market, I don't know if you need it, honestly. And it's really, for those of you that don't know, preferred equity is a way to essentially put your investor second to someone else's money. That's really the simplest way to do it.
Yeah,
and ultimately, I don't like essentially giving someone almost their preferred equity is really the guaranteed.
No, it's preferred.
Guaranteed money.
It's really what it is. It's
and then now your
over
investors
the
are
other
second
equity.
to that, and so I don't really like that style, right?
I think
but
if you're
there's
in
a right place and a right time.
Yeah,
for it.
there might be the right deal. A certain deal might make sense on that, but just realize that if things go south, right, and the preferred equity is going to get paid above and beyond your regular equity.
Absolutely.
And so that's a little bit of a risk that we don't like to take on, and ultimately we don't need to, right? We have enough equity that we can do it the traditional way, I'd say.
Yep.
But those guys have certainly hit us up quite a bit. Yeah. So we got any other questions, man?
No, I think not. The chat just says integrity goes a long way, especially in raising money. Absolutely.
No, absolutely.
So with that said, let's call it a wrap.
Cool.
We'll see if anyone has anything else.
We will see you next week when we talk about multifamily deal life cycles.
All right.